Crypto feels like it wants to go higher. It just does. We've been rangy for a while. We keep knocking on the 80,000 door, but that's with, Hormuz and the war and oil higher. You get any relief there, crypto's going higher. And I think it's going higher anyway. You see all the crypto names are rallying today. That's partly on more optimism around the Clarity Act passing. And it just feels like there's enough buying. MicroStrategy goes up every day. That spread has stayed out at 130. That means he's got buying power. And so I think we're going to take this 80 out. If we take 84 out, we go to 100.
The biggest signal for Bitcoin and crypto right now may not be coming from the crypto market itself. It may be coming from the stock market. While most investors have been focused on geopolitical tensions, oil volatility, and fears surrounding the Strait of Hormuz, something historic has quietly been unfolding beneath the surface of global markets. The Nasdaq, the S&P 500, and the Russell 2000 all just closed at brand new all-time highs in the same session, adding more than $1 trillion in market value in a single day. But what has analysts especially focused right now is the Russell 2000 breakout. Historically, this index has acted almost like an early warning system for crypto bull markets. In late 2012, the Russell broke out before the massive 2013 Bitcoin rally. In late 2016, it happened again just before the legendary 2017 crypto cycle. Then, once more in 2020, before the explosive 2021 run that took Bitcoin and altcoins to new highs. Now in 2026, the Russell 2000 has finally broken out again after consolidating for 64 straight months, the longest consolidation period in more than 2 decades. That is 17 months longer than any previous cycle before a breakout occurred. At the same time, another major macro indicator has also started flashing bullish signals. The ISM Manufacturing PMI, which many investors use to track economic expansion and liquidity conditions, has now climbed to a 3.5-year high after bottoming in 2023. Now add all of this to the fact that Bitcoin has continued holding near key breakout levels despite war fears, oil shocks, and broader macro uncertainty. Instead of collapsing under geopolitical pressure, risk assets continue climbing. And according to both Mike Novogratz and Jordi Visser, the signals they are now seeing from stocks, liquidity, AI, and institutional flows are starting to point toward one conclusion: crypto may finally be preparing for its next major move higher. So in this video, we're going to break down exactly why these market signals matter, why institutional investors are suddenly becoming more optimistic about crypto again, and why many analysts now believe Bitcoin could be preparing for a major breakout towards 6 figures. But before we get into all of that, make sure to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our future market updates. When crypto crashes, people panic. When the stock market dips, people sell. But gold? Gold has held value for 5,000 years. And it's not slowing down. Most people don't know you can hold physical gold and silver inside a tax-advantaged IRA. With iTrustCapital, you can. Buy and sell gold and silver 24/7. No dealer markups, no waiting on phone calls, no outdated processes. Just a few clicks, same as buying Bitcoin. And here's what makes it powerful. Pair gold with crypto in the same account. One hedge, one growth play, one platform. Your metals are held with institutional-grade custody and full tax reporting. Gains inside a Roth IRA? Tax-free. Real U.S. customer support. $100 bonus when you fund through the link below. Markets change. Gold doesn't care. Thanks, and enjoy the video.
The stock market is on fire. Literally, it cannot stop going up regardless of what happens in the world. A couple of data points is that we just saw in the month of April, the U.S. stock market and the S&P went up over 10%. That has only happened 12 times ever in history. It also had 7 all-time highs in the month of April, which is the 7th time that's ever happened. When you look at those data points out over the next 12 months, the numbers are bonkers. It suggests that we are likely to see a double-digit return over the next 12 months from the stock market, even though people are calling it a bubble and there's issues. What do you think is going on here, and why does the stock market keep going higher?
The stock market is being driven by something that we talk about every single week. It's something we agreed was a good thing for us to do on here. We talk about AI. So let's leave crypto to the side for a second. But the disruption of artificial intelligence into our world 6 months ago, bubble was front page news every single week. Go to Google Trends. Just before Opus 4.5 came out, it was a bubble. Well, now we're seeing the revenues come in. And when you have a stock like Caterpillar, for example, so Caterpillar, it was up 10% yesterday. Their PE is now approaching 40. Those types of things don't happen for cyclical companies unless you're kind of coming out of a recession and you've had things down. Their PE is almost double NVIDIA's now. I mean, think about where we are. Semiconductor names, every single one. Most of them are in one of my thematic baskets, my portfolio. They don't stop. So this is AI. And to show you how breadth still allows people to be bearish. Let's forget software, which is still near the lows. Let's forget the private equity companies, which have not budged very much. We make all-time highs in the S&P, and the median stock is 13% below its all-time highs. About half of the S&P 500 companies are up for the year, and about half are down. So unfortunately, and I literally, because I spent so many time with institutional clients and because the subscriber wall went up and I'm focused a lot, I had to come up with a term for this, because if you're invested in the S&P 500, which is what most individuals are through their financial advisors, there's a benchmark arbitrage that's happening. When you have something that we've both stolen from Elon Musk and said supersonic tsunami, it means something's moving fast and it's structural and it's just overpowering everything. So if you're invested in things that were around business cycles and the consumer, you're not doing very well. If you're in software, you're not doing very well. Even with the hyperscalers, you're not doing nearly as well as you are with all of the things related to power, all the things related to semiconductors, all the things related to servers. Are those things extended? Yes. If you look at all these charts, it's a straight line up. And that's why when you look at the S&P, it doesn't look as crazy because it actually was down for a while and then it went up. But the semiconductors, the memory names, they've just gone through the roof. So I think what people have to, in their mind, this is the early innings of this.
But I do think that retail flows are chasing the AI trade merely because it is more volatile and it is driving more returns right now than crypto is. At some point, maybe that evens out or even shifts back to crypto. But people that are ignoring that data point are lying to themselves.
I completely agree. I've said it here as I've gotten to know the crypto space. The retail community is the energy for crypto. It's, if you don't have the energy, you can still work your way higher. But what's the difference if crypto is up or down 5% for the year? It doesn't bring the enthusiasm as a growth asset. So it needs to be in a place where the other stuff isn't working or where it's not as obvious and it's not going through. Now, the problem is when you get this kind of move higher in these things, and it's still not participating and semis are driving everything, then it makes it hard. So I think the retail crowd is going to have to be brought in at some point. I'm not really sure what the catalyst will be at this point, but catalysts short term tend to play out. The only thing that needs to happen is there needs to be something that moves Bitcoin. We go in these stages. First it was 74. We got above 74. Now we keep pushing up to 80 and we keep falling back. I do think there's an underlying bid which will continue to push it. I talked about how I had been buying things and I bought some call options on MicroStrategy. And the reason is because I do believe that in the second half of the year, you're going to start to get money that's moving into this space.
Semiconductors, power infrastructure, servers, hyperscalers, and AI-related industrials have effectively become the new center of global capital allocation. And historically, periods of expanding liquidity and aggressive risk-taking eventually spill over into crypto markets as investors begin searching for even higher beta opportunities. That is why Visser believes crypto's relative underperformance versus AI stocks may not be permanent. Instead, he sees the current divergence as a setup that could eventually reverse once retail enthusiasm and speculative capital rotate back toward Bitcoin and digital assets. While Visser focuses on liquidity, AI, and macro risk appetite, Novogratz is looking directly at crypto market structure itself. According to him, despite repeated geopolitical shocks and failed breakout attempts near $80,000, Bitcoin continues showing signs of underlying strength. Sellers appear exhausted, institutional participation continues growing, and crypto-related equities are beginning to regain momentum.
You were the Clarity Act optimist at a time when I was expressing pessimism and others were expressing pessimism, but it really does feel like it's going to get done, Michael. So what is that? Is that just politicians afraid of the crypto lobby? Is the consensus
I
actually
think
been met?
both sides, Republicans need to get it done because they kind of campaigned on it. And, there's a couple there that, Tillis was really holding things up around banking, but that seems to have gotten done, right? Banking versus stable coins. And now Tillis was holding things up a little bit around the Trump ethics stuff. But it looks like he's going to let that go to committee. There's still some work to do on the Democratic side. Actually, I'm probably fly down there next week. I'm going to meet with a bunch of senators and really just express a very strong opinion that America needs this, right? We need it because crypto and this bill is going to be part of the way we sell our great brands to the rest of the world through tokenization of mortgages, of equities, of privates. Like the world is going to move to these neobanks and they're going to be in your palm of your hand. And I say this all the time. There are probably 5.5 billion people that can't call a broker, maybe more, 6.5 billion people that can't call a broker and buy a share of Apple stock. Right? You can do it in the U.S., you can do it in Japan, most of Western Europe, but large parts of the world, there's no access.
First of all, kudos to you on the Clarity Act. Looks like now it's going to get done, or at least greater than 50%. Where are you in your personal percentages? 70?
70, 75. I mean, listen, politics is weird. And, the Trump stuff is fascinating because it feels like what used to be once every 2 weeks, kind of a crazy tweet that went to once every, week to once every day. And now it's multiple times a day where things are just not in the ordinary course of what we expect, right? If it's the attorney general bringing charges against Comey on a seashell photo and tweet. Like, this is just so far out of the norm of U.S. politics that it's unsettling. And it's unsettling to people in politics, certainly, but it's not unsettling the market, which is interesting.
Well, when you look at crypto, though, crypto's down on a relative basis about 35% from the S&P in terms of a divergence from the S&P. So as a macro trader, is that something you like seeing where that could potentially close the gap?
I don't know if it completely closes the gap, but I think crypto potentially can get its mojo back. And when crypto gets its mojo back, you don't know where price discovery goes, right? What I've noticed recently, there's just not a lot of sellers. We had the sellers, people that needed to sell sold. We got all the way to 60. We kept selling every uptick. And like what we're seeing in Galaxy is less sellers. And you're seeing a lot of buyers in the retail market. Right? ETF volumes are big. MicroStrategy volume is big. Watch that the crypto stocks are trading well. And so there's good mojo around crypto. There's the Consensus Conference, right, which is owned by Bullish, Tom Farley, Chris, and Brendan Blumen, is down in Miami. I think it starts tomorrow, Wednesday, Thursday. And I was on the Zoom with Reid Hoffman, right, from LinkedIn and big VC. He's on his way there. I was like, wow, that makes me bullish, Reid, that you're going to Consensus, right? Now, he was a Bitcoiner for one, but he's not like a known, Bitcoiner. And I was talking to Tom. He said every institution's down there. So the conference went from a big kind of retail brouhaha to very institutional. Again, I'm not there right now, but I might fly down for a day. That was bullish to me. That Bullish's conference was bullish, right? That their institutions are showing up at these things.
Beyond the macro setup, there are also major political and regulatory developments beginning to shift sentiment back in crypto's favor. Momentum surrounding the Clarity Act appears to be accelerating rapidly, with Coinbase Chief Legal Officer Paul Grewal recently saying he is now very confident the legislation will pass before the end of summer. And for the first time in months, the single biggest roadblock holding up the bill may finally have been resolved. Banks had fiercely opposed allowing crypto companies to offer yield-bearing stablecoins because they feared deposits would leave the traditional banking system. But lawmakers now appear to have reached a compromise where crypto firms cannot simply pay passive yield for holding stablecoins, while still allowing reward systems tied to actual platform activity and usage. That compromise may have broken the legislative deadlock that stalled the bill for months. At the same time, geopolitical fears that helped suppress risk appetite may also be starting to cool. markets reacted strongly to reports surrounding a potential multi-point framework aimed at reducing tensions involving Iran and the Strait of Hormuz. Oil prices plunged after the report surfaced, easing fears of a prolonged energy shock across global markets. But the story has also become deeply controversial after multiple analysts and whistleblowers alleged that massive oil short positions were placed shortly before key headlines became public. According to reports, billions of dollars worth of bearish oil trades appeared ahead of ceasefire updates, military delays, and major geopolitical announcements. The Department of Justice is now reportedly investigating roughly $2.6 billion in suspicious oil trades tied to those events, though authorities say there is currently no confirmed evidence of insider trading. Still, regardless of how those investigations unfold, the bigger takeaway for markets is becoming increasingly clear. Liquidity conditions are improving, risk appetite is returning, institutions are re-engaging with crypto. Regulatory momentum appears to be shifting in the industry's favor, and despite every major macro scare thrown at it over the past several months, Bitcoin continues refusing to break down. For many investors, that combination is beginning to look less like a temporary bounce and more like the early stages of a much larger move. But as always, the big question now is whether Bitcoin can finally clear those major resistance levels and trigger the next phase of the cycle. If you enjoyed this video, make sure to like, subscribe, and turn on post notifications. And let me know down in the comments, do you think this stock market breakout is truly the biggest signal yet for a new crypto bull run? Or are markets getting ahead of themselves once again?